Achieving wealth may seem like a daunting task, but it boils down to a simple technique: spend less than you earn. While it may be difficult to increase our earnings, controlling our spending is much more within our reach. We can all learn to become frugal. One of the most crucial aspects of becoming wealthy is developing the ability to be frugal. However, it's important to note that frugal and cheap are not synonymous. Frugality implies intelligence and resourcefulness when it comes to managing finances, whereas being cheap suggests a lack of generosity and quality. If someone confuses the two and calls you cheap when you're frugal, it's likely a reflection of their lack of financial wisdom. Frugality is a crucial component of building wealth. If you aspire to amass millions of dollars in wealth, there are a few different paths you could take. While earning a sizable income is certainly one way to get there, it's not always feasible for everyone. That's where the importance of wise spending comes into play. Practicing frugality is a tried and true method that many self-made millionaires swear by. It's not just about making money, but rather knowing how to spend and save it wisely. Many millionaires attribute their success to their ability to be frugal. Take, for example, someone who earns $5 million a year. It sounds like a lot, but if they're spending just as much or more than they make, they'll quickly find themselves in a dire financial situation. Banks and credit card companies are more than happy to lend money to high earners, knowing they can profit handsomely from interest. But it's the person who lacks financial wisdom who ultimately pays the price. To avoid this, it's crucial to live within your means and spend less than you earn. This is true no matter what your income level may be. Frugality, your hidden strength. Let's say you make $120,000 a year before taxes. After taxes, you're left with just $90,000. This is still a good income, but it's important to determine a reasonable spending level based on your earnings. Being frugal doesn't mean living like a miser, it simply means being mindful of how you use your money. So whether you're making $100,000 or $1 million a year, the key to building wealth is being smart with your spending habits. If you cannot save a minimum of 10% of your earnings, then it will be very challenging to build any meaningful wealth. Hence, being frugal is a key factor in building wealth. You need to live far below your means. Learn about investing, download our free guide, see details in text. If you're making over $7,000 per month, it's essential to spend your money wisely. Let's say you earn $8,000 per month, it's recommended that you save at least 10 to 20% of that, which equates to $1,000 to $2,000 in savings per month. By aiming for the higher end, you'll save about 25% of your income, with those savings going straight into your investment fund. This approach is called paying yourself first, and it's crucial to get into the habit of doing so. By allocating $2,000 of your monthly income directly to your investment account, you'll be left with $6,000 for your monthly budget. To maximize your savings, it's important to review your expenses and aim to lower them. If you can reduce your monthly expenses to $4,000, and you're earning $8,000 per month, you'll be saving 50% of your after-tax income, which is the ideal situation. Lowering your expenses to $4,000 per month may seem challenging, but it's achievable even for small families of 2 adults and 1 or 2 children. By consistently saving $4,000 per month, you can build a solid nest egg within 5 to 20 years, depending on your investment portfolio return. If you follow a straightforward approach by using index funds, you can potentially achieve a reasonable 10% return on your investment. By doing so, you could replace your employment income with your investment income. Pay yourself first. It's important to adopt a frugal mindset and avoid spending money on designer clothes and fancy new cars. When buying a car, it's recommended to purchase one that's 3 to 5 years old, ideally still under warranty and with low mileage. By spending only 50% of the base price, you'll be in a much better position financially. For example, if you buy a car for $10,000 to $20,000 and use it for 5 years before selling it for $10,000 to $15,000, you'll be in excellent financial shape. In contrast, if someone buys a brand new car for $40,000 and sells it after 3 years, they'll likely lose almost $20,000. That's almost half of their investment in just 4 years, equating to a loss of $5,000 per year. By buying a car that's 3 to 5 years old, you'll only spend approximately $1,000 per year after selling it 2 to 3 years later, making it a much better financial decision. Managing your finances wisely can be a key factor in achieving your long-term goals. For instance, if you own a car and use it for either a year or 4 years with an average annual cost of $1,000, you can save a significant amount of money. Being frugal is the way to go, and there's no need to spend a fortune on a shirt when you can easily purchase a high-quality one for $10 to $20. Keep an eye out for sales and visit outlets to get the best deals. Eat at home, save money. For example, instead of spending $10 to $12 per meal at McDonald's, you could make homemade burgers for your family for around $10. The difference in cost adds up when you spend $50 per meal for a family of 3, twice a day. If you do this for 30 days, you end up spending $3,000. In contrast, with wise grocery shopping, you can make delicious meals at home for around $500 to $600 a month. This shows the vast difference between buying things at home versus dining out. Consider your daily coffee habit. You could easily spend $5 on a cup of coffee at a major coffee chain, but making it at home costs only a few cents. By frothing milk and adding cream or milk, you can make your coffee for around 20 cents. The savings are significant if you apply this strategy to every aspect of your life. This will result in significant savings and will enable you to gain financial freedom much quicker. Adopt smart spending habits. By being mindful of your spending and adopting a frugal approach, you can easily save a significant portion of your income, even up to half. The key is to make a budget and identify areas where you can cut back on unnecessary expenses. Once you've done that, make sure to prioritize paying off any outstanding debts, such as credit card balances with high interest rates, and then put any remaining funds into your investment portfolio. For instance, if you have $20,000 in your bank account, use it to pay off your debts first and then invest the rest. Going forward, whenever you receive your paycheck, transfer the excess funds immediately into your investment account, either on the 1st or 15th of the month or as soon as possible. To ensure you stay on track, set up a recurring payment plan. By following these steps, you'll be well on your way to building a solid financial foundation. By taking control of your finances, you can set yourself up for a comfortable future. It may require some initial sacrifice, but the payoff will be worth it. One key to success is creating a balanced budget every month, which will help you keep track of your spending and avoid using credit cards to manage your expenses. By being mindful of your purchases and budgeting for the things you want, you can still enjoy life while saving money. Don't let high prices deter you from buying the things you love. Instead, wait for sales or buy out of season when prices are lower. This will allow you to stock up on your favorite items while still staying within your budget. By being frugal with your spending and saving money, you can invest in your future and generate income for retirement. Think about the future. Remember, the little sacrifices you make today will pay off in the long run. By adopting a frugal lifestyle now, you won't have to work as hard in your later years to maintain the same standard of living. So, take control of your finances, create a budget, and start saving for your future today. To develop the strength to achieve financial success, it's important to cultivate a frugal mindset and a deep understanding of the value of money. With these tools in your arsenal, you can confidently invest your hard-earned money and create a budget that works for you. It may sound daunting, but achieving financial freedom is achievable with a little effort and dedication. By taking these steps, you can retire early and enjoy a comfortable life without worrying about finances. Remember, the best time to start was 20 years ago, but the second best time is today. So don't hesitate, start taking control of your finances today. If you have any questions or need guidance, don't hesitate to reach out for help.